taking a look at the NSE, as I said earlier, snapping a 3-day rally, 1/3% loss filtering through on the NSE 20 index. What did you make of yesterday's trading activity, and what are your expectations for the trading day ahead as we wrap this week up?
Well, I think investors have just taken a short breather. We had Kenya Airways, Centam, and of course Uchumi having come back to the market, and I think that excited the market, and so we did see investors taking positions on those announcements. So I think going forward we could expect that the today and maybe Monday will be quiet days as investors now seek alternative areas of investment.
Let's take a look at some of those companies that I mentioned earlier. East African Breweries, one of them to fall back yesterday, and that on the back of the fact that we've seen a rise in sin taxes, and that announcement made by the finance minister on Wednesday. What's your outlook for East African Breweries, and how do you see this, affecting company earnings moving forward? Because we know that this is often just a knee-jerk reaction after a budget announcement.
Well, there is that, and also the announcement that they're going to be paying 20 billion for the stake in SAB Miller, and I think that also has had an effect on East Africa Breweries, considering that it's going to be quite a big capital investment, and that will definitely have an effect on their balance sheet going forward, and probably their ability to continue paying high dividends. I think on the side of taxes, we still don't know exactly how much the increase is. I think it was 5 shillings per litre on beer, but we don't know the exact implications. We will have to wait until the parliamentary decisions or the parliamentary talks on the budget actually go through, so that we know exactly what has been approved in the budget. So I think that will not come as an immediate effect, but will definitely affect their bottom line.
Just taking a closer look at the investment East African Breweries has made with that purchase of a 20% stake from South African Breweries. What return on investment are you pricing in with a more longer-term scenario?
Well, I haven't gone that far, but what we are feeling is that considering the fact that they have to sell their stake on a very liquid market, which is the Tanzanian market, which is the stake that they have in Tanzania Breweries, and the fact that they have to do a big capital outlay, we feel that that will have a negative effect on their balance sheet. And definitely for investors, that is not very good news. But I think they will probably give us more information that will allow us to make a better analysis.
Of course, that's just one of the announcements that's impacted one stock on the NSE. Let's take a look at another, because we've had the huge budget deficit now raising fears of higher interest rates next year. What's your outlook in that regard?
Well, the main issues with this budget is that it actually strikes a very thin balance, and we are actually worried about where the government or how the government intends to raise the revenues. Well, one of the ways would be, of course, in taxes, and that would mean a much more efficient tax collection regime, which we haven't seen happening in the last 1 or 2 years. And I think that is a major worry for the financial fraternity in Kenya. And I believe that we are actually hoping that economic growth will also support the budget, because at the end of the day, if the economy does not grow as expected or as the finance minister projected, then we will definitely see problems coming on that side of funding the budget. That leaves probably international donors or debt, which is another burden, of course, to the public. And so it is quite a thin balance.
So let's take that a step further, and taking that rising rate implication a little broader, because it piles pressure on debt issuers. We've got CFC Stanbic Bank, Safaricom, Housing Finance, all of those companies facing a 4-fold jump in interest costs in their corporate bonds following last week's surge in the 6-month Treasury bill rate we've already seen. So how are you viewing that scenario at this stage?
Well, we are definitely going to see rising interest rates. We have seen rising interest rates over the last 1 or 2 months. And I think that banks will now be hard pressed to keep their interest rates low. So that now takes away another avenue for growth, because the main growth driver for banks was that they were offering lower interest rates, which was spurring lending or spurring borrowing for that matter. And I think that now that we are expecting interest rates to go higher, the government will need to attract funds, and in order to attract those funds, they will have to do something about interest rates, which means we are expecting them to go higher going forward. Banks as well will probably be hard pressed to keep them low. May slow down the economy, which now brings us back to the argument of whether we can actually achieve the economic growth that was projected in the budget.